Welcome to TradeTheNBI.com. This is John. This report is for the 30th of April. We're about to end one of the best Aprils since, 1974, in the midst of one of the biggest global depressions ever. An amazing feature, and this is why we've been talking so long about suspending your beliefs of what you know versus what you see. And what we know is the Fed is backstopping key levels and taking the market higher, and you have to ignore the fundamentals of the complete economic disaster that exists in the world. And it's an important aspect of trading because, particularly when it comes to trading, we're talking about the future and the expectations of what a future may look like at any given moment. As those dynamics change, perceptions change, and so do valuations. This is where the concept of the market multiplier always has relevance, because you have to take into account the market's anticipation of inflation, what the value of a devaluation of U.S. currency means, and the market always rises under those conditions. And this is something that, clearly you're identifying and seeing it right now. I mean, we're at near record highs, where most companies are struggling. Now, obviously, some tech companies that deal with online work and that are doing very well. Even Tesla had a remarkably decent quarter, except for now, going forward, without them having workers at their plants, it becomes a problem. And it begs the question why the simple solutions of creating these Amgen has the 5-minute test, and that it's like, well, at some point, if you're a large employer, why you wouldn't want to get a hold of one of these things and just test workers before they come into work to see if they have virus or not. And if they don't, then they can go ahead and work as normal without any of this hyper, protection. The same with air travel. I mean, literally, if you pre-screening for TSA, if you set up where you go and you take the test and then you can walk into the airport, you don't have to have any of these social distances and ridiculous ideas of separating people from, seats and stuff like that. And you don't need to wear masks, because if you know everyone around you doesn't have it, then it's sort of a moot point. But let's not let logic get in the way of a perfectly good, craze. So we'll just follow the market as it is. We got cyan under red, and I don't have to say, but we know that means it's always a buy in that configuration. Right now, we're getting a little bit of softness here with the steel fading, but that's because we just had a huge move up. We got the 61% Fibonacci line. Let's go ahead and put the number up right there so you can see it at 29.23. That becomes your pivot point. Around there, and it's just a matter of moving into the either 50K, 25K, 5K ES chart, and trading it off that. But again, we talked about this, the rising shakeout. We're now at higher highs with higher shakeout readings. It's all consistent, so you got to ignore what you know versus what is. Likewise with the NASDAQ, producing the exact same. And it's been maintaining well above the ABM. Well, it's been above the ABM green throughout most of this reset that took place, and really can't object to it. And obviously the NASDAQ has been outperforming dramatically because we're well above the 76. So it's a full zone higher, as I refer to it, because I always refer to these as various zones, because the market reacts differently with our readings under each of these different zone areas. From a Euro standpoint, again, this can't get much worse than what's going on in Europe. In fact, you have a reinitialization of lockdowns in Germany, and that there's very little activity going on now. Of course, come Monday, the first liberalization of the lockdown restrictions in Italy take place, even though it's very limited as to what will be allowed. This idea of being able to stagger open, to most of us who've been in business, and that is an asinine proposal and won't work. But hey, no one ever accused governments of being intelligent. So as long as they operate in hyper fear and without the ability to rapidly be able to tell someone whether or not they either have the virus, had the virus, are immune from the virus, you're just going to have people terrified. And as long as people are in fear, they don't do anything. And we know that fear is a huge component, particularly even in the markets, because greed and fear are the two elements that really drive what we see from economic activity. You're gonna love ETFs and the ability to just rebalance and readjust the value. And in fact, of course, oil, from the ETF standpoint, I said it's no longer going to track the exact nature of oil, because obviously it can move to negative yields when these contracts expire. So you rebalance and artificially change what its value is. We were at like $1 something. You just move the decimal points and bingo, you're back up to 17, just like that. And I don't know if they'll reverse it when it gets up over 100 or 200, if it gets if things get moving again. But at least some activity will help with oil and the extreme glut, even though we already saw that there was a huge production reduction already taking place as people just get nowhere to put it. And even if you can't transport and store it somewhere, that's a problem for a producer. So you can't pull something out of the ground if you have nowhere to put it. It's not like you have giant lakes of just oil lying around. And from gold, of course, it is poised to continue its move to new highs. There's just no question about that. One of the few safe havens. So if we go back, if we look at, I thought we'd start with the current, because we can look at the current setup as we're just undulating back and forth. We moved up to new highs, created a little bit of a negative sigma event right here, and you can see that's led to the move back to the 0%. At this particular point, even created a little bit of a subtle one right here with the dip down. So we're in that modest, and of course there's some positive extremes to fill. If we go back into the intraday portion of things, we can see how that all played out. It was rather nice day, pretty clean, and and this is what I find nice about this, is that even with these moves up, depending on the signaling you're getting from DOC spreads and that, you can kind of begin to gauge. When you're getting a DOC spread and you're below the negative 13.5, you know that one has the potential for a little bit further decay, whereas the ones that, and we were talking about this when it comes to the move of steel above and back below when cyan is under red, and how to gauge, we put this on the Skype chat, that some of those dips can be less than the previous ones. And I kind of marked that back over here to kind of show the differential between some of the setups and why we expected this to be a much shallower dip going through comparative to this one that just extended further and further, and then once it dipped below the negative 13.5, it left room for it to extend a little bit. If it had continued to cross up above, it probably would have turned around much quicker. This one even similarly stayed, but it crossed above the red before it made its downturn, and that's really why it just consolidated low at the end and then continued to go. So those are kind of advanced setups in being able to see, when to cover for, a little bit extra gain. It certainly became clear at the dip where we had this very low power mode reading, and that's why I created so that those lines, because when you get down to that reading was like 175, and it was just a matter of the up pivot starting to take its effect. And once it did, boom, you get the full confirmation. Of course, that also corresponded to cyan under red, which is always a buy. And boom. Didn't last very long in this particular case, but still, it's enough to capture a few extra points and not just be in a short setup that doesn't work out. So with these extended moves in that, it's just a matter of following their baselines, and this is where particularly having the Morganachis on there is helpful, because when you can see a long period of the zero line basing at a particular point and bouncing up and down above it, it's definitely worth paying attention to those, because that's usually where we're going to get your P2s and the X, because they're going to base off of the continuation at the zero level, and that really lets you know that there's activity supporting it at that particular spot. within that move that we had the other day, though, I mean, you can expect even more of a dip. Would not be out of the question, because you can get as much as 30 to 50% of that up move retraced and still maintain the general positive bias. So thought I'd throw that one in there. It was pretty helpful that it came in at that time. It was a good teaching point. As always, though, the indicators will be going on a little bit later today, so you'll be all set for Friday's action. And then we begin May. You know, it's always the term sell in May and go away. I don't know it hasn't really applied the last couple of years, because we've had so much nice volatility in that. And I think as long as we continue to see that kind of volatility gyration, should be exciting for us to be actively trading the swings, and the volatility has been beautiful as far as that goes. So that said, we'll continue to put up relevant charts and unique details on the Skype chat. You probably won't notice some of the alterations within the pink bars in that, simply because they're behind the scenes. It'll just try and, it's intended to map the rotations, particularly when it comes to the buy signals and them fading quickly. The key was to recognize those changes, because, an orange in this particular case, this one was very strong because of the dip of the orange below that white line. When utilizing, likewise, secondarily, we had another buy that came in through here, same dip of orange below the white in the turnaround, and they created the nice smooth moves. Whereas here, where you ended up with the turnaround move and no dip of the orange below, and you can see how soft that was. It only lasted a couple bars, and then boom, started to roll over. So that's the kind of work that's progressing now that will really tighten up from a 5K chart, and certainly enhance the broader ones as well. So it's all exciting stuff. And we just continue to get tighter and tighter to being able to just really identify all the market dynamics as they're taking place without an extreme amount of effort. So, as always, though, trade well, and we will talk again later.